Hey, what's up, traders? This is Taylor with your free video for Wednesday, the 28th of September. Hope you're all doing well. Hope your week is off to a good start and a pretty good showing here from the Bulls today. So now the question is, tomorrow and into Friday, can they do anything with it? And obviously, guys, bigger picture, like I think a handful of us here on the roster have covered over the last few videos, the market's in pretty rough shape. On the SPX, for example, you've got a monthly squeeze that I kind of think at this point would eventually fire short. We got a weekly squeeze that looks a bit bearish. And of course, we're hanging on for dear life here at support. So I do think eventually we're going to take out 3,600. And I think we're going to trade much lower. Ultimately, I think we trade down towards 3,000 and basically erase the whole COVID move. That's a different discussion for a different day. So for tonight's video, kind of lay out the roadmap here for potentially a little bit more upside over the next few days. So pretty good stuff here from the Bulls today, and especially on these lower time frames. And that's where the progress matters. When your daily structure is so beaten and we're so oversold, if we're going to get a rally going, you got to get improvement to the trend and structure on your lower time frames. So we'll take a look at all that. We'll take a look at a few other things here. But let's see. The QQQ finishes today up 2%. Volatility index down about 7%. The dollar finally pulled back. Got the Dixie down 1%. The bounce in HYG, that's helpful for the market. The S&Ps, of course, up 2%. Let's see what else. Google up 2.5%. Apple down 1 and change, which is actually pretty impressive given we were down about 4% towards the open. Tesla up about 2%. Amazon up 3%. Nvidia up about 2.5%. Not bad stuff there from the Bulls today. So, for starters here, guys, the dollar, the almighty dollar, wreaking havoc on the market. So, let me think. I think it was yesterday. I was on the mic in the options room yesterday, and we basically put together the recipe for a bounce off of support. Meaning a bounce off of support for the S&Ps, the Qs, etc. And I think I still got those notes here. Let me see. Looks like I got rid of those notes. But part of the recipe for a bounce, the recipe for what I think would be very short-lived double bottom, a big part of that is going to be the dollar. So the level that I have, the level that I had here for the dollar was 113, and we finally broke that level here today. So the correlation here, of course, is strength in the dollar, weakness in the equities market. So, a few things to consider. Even though the dollar is down a good 1% today, and obviously you can see the correlation today. Dollar down 1, S&Ps and Qs up 2. The thing to consider here is the structure and the trend remains very bullish. And we're only 3 days into that daily squeeze firing to the upside. So usually the rule of thumb of the squeeze, once it fires to the upside and you get your first green dot, we're going to tend to look for a potential 8 to 10 bars of momentum. So the point being, I don't think we're out of the woods here just yet as far as the dollar being a problem for the market. But I do think potentially you could see the dollar a little bit lower, maybe back down towards that daily 21 EMA. Now, like most things in an uptrend, if we pull back to that 21 EMA and find support, I'd be a bit inclined to think eventually we'd turn the corner and see the dollar trade higher again, which of course would send the S&Ps right back down. But as far as we sit today, we did get the close under that 113 level, and any further downside here in the dollar, beneficial for your S&Ps and your QQQ. Now, another big piece of the puzzle here is the volatility index. Now, the level that I have here on the VIX is 30. We didn't quite close below 30 today. We closed at $30.40. So I think with the VIX here, and again, there's that correlation. VIX pulls back, the market rallies. So for any strength in the market to continue, I think you want to see the VIX hitting lower prices. So, as a general statement, if VIX keeps hanging out up here above 30, keep a close eye on that. Above 30, you could see this begin to pop again, which would send the S&Ps, the Qs, and all your favorite stocks right on back down. So, didn't quite get the close under 30. Maybe tomorrow. So keep an eye on the dollar, keep an eye on the VIX, and then one more piece of that puzzle here is HYG. The level I have here for HYG is 73 plus. So a move back above 73 would take HYG back above previous support. That doesn't change all the problems of the structure. We've got daily sell signals. We're trending under that 21 EMA. But mind you, what I'm looking for right now in the market is a short-term pop. Not a reversal, not the beginning of a bullish trend. If anything, I want to be long for a few days and then start to open up some December shorts. November, December shorts at higher prices. So to get the market at higher prices, that's where these things play a role. The dollar under 113, ideally down towards that daily 21, the VIX under 30, and I think if HYG could pop back above previous support around 73 bucks, helpful for the market. All right, so a few things there, guys. Now, in terms of the market itself, like I mentioned earlier, the monthly structure, the weekly structure, the daily structure, things are pretty beat up here. So if we're going to get that big rally off of support, for conversation's sake, let's just say we're looking for a reversion back to that 21 EMA. And for what it's worth in a downtrend, it's kind of a typical reversion to the mean. Or in other words, it's kind of your typical ebbs and flows. Now, of course, when you're this oversold, the rip back to that 21 EMA can be quite the rip. So for conversation's sake, let's say we're trying to put together a roadmap here for a move towards, we'll call it 3,800. The roadmap to 3,800. So the thing here, when you're in a downtrend, when structure is just, demolished, what we want to look for is signs of progress on those lower time frames. Basically, the market has to, rebuild itself from the ground up to trigger that rally. So, as far as looking at things like that, my favorite indicator, of course, is my Big 3 indicator. So for those of you with the indicator, if you compare what it looks like now to what it looked like today at the open, you can see the signs of progress where we came into today, and if you guys look up here at the Big 3 labels, the daily, the 4-hour, the 2-hour, the 1-hour, and the 30-minute, they were all red. Red being the sell signal, meaning trend structure momentum in the trend is all to the downside on that time frame. So progress today, with the cancellation of the 2-hour, 1-hour, and 30-minute sell signal. It's kind of that transition from bearish to neutral. And it's an important part of the process. No matter how oversold the market is, if you're spitting out sell signals on every time frame, we're going to continue to trade lower. So some progress on the Big 3 indicator, and what we're also looking for here is just signs of trend on your lower time frames. So for a couple of basics in terms of, hey, this is a little bit of bullish trend, we want to make sure there's no sell signals. So the Big 3 label should either be yellow, or better yet, it turns green and goes bullish. But at a minimum, no sell signals. You want to see price action above your 21 EMA and your 50 SMA. And you also want to see those two moving averages trending above each other. Meaning you want that 21 EMA above your 50 SMA. Those things come together, you've got a little bit of bullish trend on that time frame. So the progress as far as that goes today, you can see that here on the 5-minute chart. The 5-minute chart goes into an uptrend. The 15-minute chart gets a little bit of uptrend going. You can see that here this morning. We finally ripped through the 50. Later in the session, you get that positive moving average cross. 21 back above the 50. And on my bars here, guys, if the bars are blue, that means the 21 EMA is above the 50. So you're back above the moving averages. You get the positive moving average cross. And those moving averages, they go from pointing to the downside to the upside. So the 5-minute improves, the 15-minute improves. If we pull up the 30-minute chart here, even the 30-minute chart improves here today. Back above the 21, back above the 50, and you get that positive cross. So 5-minute, 15-minute, 30-minute, showing some trending properties here. Now if we open up the hourly time frame, and here's your big level for tomorrow, 37.40, 37.50, you'll notice we're not in an uptrend here on the hourly chart just yet. And as a matter of fact, that pop that we caught today took us right towards that falling 50 here on the hourly, and we found a little bit of a rejection there at that moving average. So this is where the party could basically stop. Meaning tomorrow we could roll over, the 30-minute goes back into a downtrend, the 15, the 5-minute. that could be all she wrote, and we could take out those lows, and down we go. With the progress of the 5, with the progress of the 15, the progress on the 30, and the fact that we're still pretty deeply oversold, if we can crack through that hourly 50, that kind of shifts the dynamic here on your lower time frames. Where now you got a handful of time frames basically graduating from downtrend to neutral to uptrend. When that can take place under the hood, so to say, when the market is this far under that daily 21 EMA, that's what can trigger these explosive short rallies, these short squeeze rallies. So we took a couple of trades here today with the idea that tomorrow we're going to get a little bit more continuation to the upside. So for those of you in the options room, we did a tomorrow expiration, Thursday expiration put credit spread here on the SPX. Let's see. Why are you fighting me, Thinkorswim? I'm on November expiration. That might be the problem. Let me see. There we go. Tomorrow's expiration. Yeah, so this is a trade that we did in the gold room. Mind you guys, if any of us ever say the gold room, we're referring to the options room. We did a slightly in-the-money put credit spread. I meant to do it 10 bucks wide. I only did it 5 wide by accident. No big problem there. But we sold the 37.50 put for tomorrow's expiration. So we sold that spread for about $3.15 of credit. The max risk per contract is about 180 bucks per contract. And tomorrow we're going to try to buy that spread back at about $1.50. If we could buy the spread back at $1.50, that brings us pretty close to about 100% return on the risk. Not too shabby for a put credit spread. And then for those of you in my mastery group, and I'll make sure that in the description to the video here, we got the 30-day $7 trial going to my compounding growth mastery. So if you guys enjoyed the video, be sure to check that out. But for those of you in the mastery, we got a beauty here today. I don't want to jinx it, but I think we got a beauty here. We sold the Friday expiration 36.60, 36.50 out the money put credit spread. And we caught a pretty good rip there today after we sold it. So ideally we buy that back for about 70-80% of max profit, and then we move on to the next trade. But there you have it, my friends. It's been a while here since I've done a video. And you know what? I look at you all as my extended family, my trading family, so let me give you a quick life update here. Your boy got married last weekend. Let me see. There we go. So big things happening here. Let me see. Yeah, show you guys a couple of pictures. So my fiance, or now my wife, her name is also Taylor. So two Taylor Hortons running around. But yeah, big night, a memorable night. One of those nights you kind of wish didn't quite come to an end. But the good news is, now I'm back to focusing on the market. So, hope you all found this helpful. If you haven't already, go on ahead and hit the like button and hit the subscribe button. Helps us grow the channel, helps us reach out to a bigger audience of traders like yourselves. We would appreciate it. And for tomorrow, we'll see what's up there around 37.50. Through that, I think the bulls have got a chance at a bit more upside. If we can't crack through 37.50, don't forget there's a lot of pressure here on the market from your bigger time frames. Enjoy the rest of your night, guys. Hope you all found this helpful, and I will talk to you next time. What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.